Hooty hoo, all my stock market gamblers. Welcome today. It's Friday. Wow, this week went by so quick. We only had 4 trading days. It just flew past. So what's going on in the market today? Well, the markets are down, right? They're down. Okay, Dow's down about 250, NASDAQ down about 250. We really are in a consolidation mode. Now, here's what happened. Last week, we got that big gap up, right? We gapped up, and now we're just staying at that level. 5 trading days, we're still at the same level as we were last Friday, exactly the same level. All right, so the gap happened up, and we're now in consolidation, building energy for the next big move. Now, I do think we're going higher, I do, but here's the thing. We could come back first and fill that gap before we shoot up higher. And that's probably what's going to happen. Would I short the market here? No. I have a couple of long positions on, but I would like to add to them as we come back and we fill that gap. Right now we got this tug of war going on between the bulls and the bears. And I do think we're going to fill that gap, come back down and consolidate there because there's a lot of fear in the market. But basically, we've been flat for the week. We've had big up day yesterday, big down day today. Pretty flat for the week. Nothing all that exciting yet. It's consolidating. Then it's building up energy for its next move. Now, like I say, I am a believer the market will go up higher in a short covering rally. That's just my opinion. My opinion's also that we will probably come down first and fill that gap up that we had last Friday. All right, so let's move on to the real estate market. Now, I'm a real estate broker, as most of you know, and when I got up today, I looked at my emails. Now, the first 2 emails, they had interesting titles. One said, huge price reduction. Huge price reduction. The other said, huge price improvement. These are going to be words that real estate agents are going to throw around a lot. Huge price reductions, huge price improvements. Now, both of these homes were on the east side. One was in Fremont, which is in the East Bay. I live in the Bay Area. That was in the East Bay. And one was in San Jose on the east side. Now, this is what I call the creeping crud. Okay, so it started to drop in these areas. Prices have come down. Both of these price reductions were over 10%. They've already dropped the property over 10% from their original list price. So these price reductions, they start on the east side. But this creeping crud, it starts to move over to the good side of town, and it'll get there. It will get there. Yes, it's the creeping crud that, a lot of people say it's never going to hit my area. I beg to differ, but that's your opinion. Look, here's what we got going on right now. We got inventory is exploding higher. Why? Well, because basically sellers are getting nervous. They have a fear of getting out. They want to get out. They want to get their market onto the property. So the inventory is starting to spike up with new listings, right? All right, now sales are way down. So sales are way down. Inventory is going up. Now we're getting these price reductions. As we go into summer, we're probably going to hit 7 and 8% interest rates. Now people say, Mike, that's not going to happen. The Fed's going to turn around. They're going to reverse course. And I believe they eventually will, but I do believe they're going to increase 50 basis points this month in June, 50 basis points next month, which would actually send us up to about 7 or 8% for mortgages. Now, if the Fed ever got really serious about fighting inflation, well, they'd have to come up to at least 9%. They have to get a real rate of interest going. Now, when you got inflation running at 8%, you have to get above it, 9%, and then you'd have a 1% real rate of interest. But that's not going to happen because the Federal Reserve, they don't have the guts to do that because it would crash everything. And even if they did that, it would still take several years for the inflation rate to return to normal. Now, what the Fed calls normal is 2%. It's not going to happen that quickly. It takes time. And first of all, they're not fighting inflation. They got to get rates above the rate of inflation, and they aren't willing to do that. So their fight on inflation is non-existent, and inflation is going to continue to run wild. Well, this brings me to the point. Well, everyone says, well, Mike, my house will just go up with inflation. Not necessarily. That's not what I believe. Your house has already gone up with inflation, but now the inflation's hitting the consumer. They're hitting the consumer in the grocery store. They're hitting the consumer at the gas pump. The consumer doesn't have enough money to pay his rent, to pay his mortgage. Something's got to give. Are they going to give up eating? I don't think so. I think they're going to continue to eat. Are they going to give up driving? Americans, we love our cars. We're going to drive, right? So what are they going to give up? They're going to give up their mortgage payment. And this is going to bring the evictions onto the marketplace. So I do not think your house is going to go up with inflation. I think the evictions are going to come on. They're going to crash the market. The other thing I hear a lot, we got a lot of building going on, right? 1.8 million homes are being built right now. Okay, so 1.8 million are going to flood the market. These are new construction, new homes. But now a lot of people go, well, not in my area. We don't have any building in your area. Look, it doesn't matter if you got building or not. Here's what's going to happen. Okay, the buyers are going to go away as interest rates go up, as prices go up. The buyers go away. The buyers are in free fall, right? And now not everybody can make it out at these high elevated prices that are in your area. These prices are high. Now we all know that Billy Bob down the street, he got out at the top. He got out at the highest price. Now they've already come down. Now Redfin is already telling you to price your home below what Billy Bob got out at. Billy Bob got out up here. You got to price your home down here or it's not going to sell. Look, not everybody's going to make it out. If everybody wanted to get out right now, well, it just market goes to zero. There's no buyers, right? But everybody can't make it out. Maybe one or two will make it out on your street. Maybe 4 or 5 will make it out in your area. But what's going to happen is not everybody's going to make it out. They're going to chase the market down. Now, I hear this a lot also. Well, Mike, they got solutions out. They're already talking about, they got this 40-year adjustable rate mortgage loan coming out. It's going to save the housing market. It's got negative amortization, so it's all going to be okay. Look, I don't think that's going to save the housing market. I really don't. You think it's going to save the housing market in your area? Well, maybe your opinion will be right. I hope you're right. I would like houses to stay up here. I just do not think they will. I get paid to sell houses, and I like getting paid a lot of money, so I'd even want them to go up. But I just don't believe that. Now, why don't I believe that? I don't believe that because the system is broken. The system is broken. Now, this is where it gets scary, and this is why I'm not invited to a lot of parties, because I love this stuff, and I love talking about it. But the system is broken. The whole system is going to come down. That includes the stock market, the bond market, the housing market. Now, what's going to bring the system down? It'll probably be a black swan event. Maybe it'll be pension, maybe a pension crisis. Could we have a pension crisis? Look at what pensions are invested in. You see, pensions, they have to make about 7% return on their money so they can pay you your pension. If they don't make that, your pension goes broke. They don't have money to pay you. Now, maybe the government steps in and bails them out. Maybe that happens. But once again, that's printing of money. Printing of money is a problem. But here's what pension funds are invested in. They're invested in commercial mortgage-backed securities. They're invested in the subprime auto loans. Subprime auto loans. Because the pensions, they're grasping to get a return, to get that rate of 7% so they can pay your pension. Look at the Social Security system. It's broken. We have $31 trillion in debt already in this country. We got $9 trillion on the Federal Reserve balance sheet, at least the balance sheet they show you. I actually think they're buying stocks and ETFs, which is a completely another balance sheet that we're never going to get to show you. But I was having this conversation with my accountant. He's going, Mike, you realize like in 7 years, Social Security is going to be broken? I go, I know, it's terrible. There's not going to be any money. You see, when Social Security was invented, for every one person that collected Social Security, there were 150 people working to pay that one, because people died at a younger age. Now we're living into our 80s, 90s, and 100s, and we still take Social Security at 62. Well, at 62, when the Social Security was invented, actually it was 65, but people died around 62, so very few people were on the Social Security program. But now for every one person that collects, you know how many people are actually working to pay that? 2. Two, very sad. The Social Security system's broken. So my accountant said, well, what they're going to do is they're going to reduce Social Security. You're not going to get 100% of your Social Security. You're only going to get 70%. And well, that's what I had to explain to him because I study this stuff. Kenny, your math is correct. The Social Security system's broken. That's an unfunded liability. But look, there is not a politician alive that is going to decrease Social Security payments because he will never be reelected. He will not stay in power. They will throw him out so quick. So what are they going to do? They're going to print more money, more money, more money. Look, we have $100 trillion in unfunded liabilities. There are derivatives out there. Now, derivatives out there, people are gambling on this stuff. What's a derivative? All right. Well, let's say you had an ounce of gold, right? All right. And then you have the GLD, which is the ETF for gold. Now, for every physical ounce of gold, there's 300 ounces of paper gold. And that would be the GLD. That would be the futures trading. But they don't stop there. You can buy a double or triple ETF on the GLD, which goes up 3 times or down 3 times, which is flat out gambling. You can buy options on the GLD, which are derivatives, which is flat out gambling. So you get the 1 ounce of gold, you get the GLD, you get the ETF, the triple ETF, then you put options on the triple ETF, and this is not going to end well. Look, if you got gold, buy physical, that other stuff, that paper gold, you got 300 people fighting for 1 ounce. 300 ounces of paper for every 1 ounce of physical. Look, the system's broken. The Black Swan event can come out of nowhere. But if the system comes down, believe me, the houses are all coming down, even in your area. Now, I know not in my area. Your area is going to stay up when the system comes down, but I don't believe you. I don't believe you. Now, do you think how much time you think we have? Well, if we got 3 years, that would be good. I know we don't have 5 years before the system breaks, but maybe you get a year out. Maybe you get 2 years out. But this system is going to come down. Stock market, bond market, and the housing market. Anyways, I hope I didn't scare anybody before the weekend. Get out there. Have a great weekend. I'm Tall Mike. Give me the thumbs up if you like this review. Why? Because it's Friday. It's Friday. Give me that thumbs up. Get out there now and have a great weekend. Bye-bye.